TANF, better known to some as welfare benefits, stands for Temporary Assistance for Needy Families. As stated in the name, TANF is a government program that is meant to give assistance in the form of funds to families in need. Benefits are distributed via the EBT system, which involves a government-issued debit card that is loaded up with funds, as well as SNAP, or food stamps, benefits once a month. To apply for these benefits, one must first submit an application through the State Department of Social Services and then take part in a personal interview. From there, the funds are meant to be put towards family priorities such as food, bills, and other necessities. Benefits vary depending on where families live, with each state having individual guidelines for TANF. The amount of benefits given to each family depends on factors such as family size, earned and unearned income, hours worked per week, housing expenses, etc. According to the official Maryland TANF website, those eligible to receive benefits may do so for a period of up to 5 years, with the average amount of monthly benefits for a family of 3 in 2014 being $264. This is actually a $48 increase in benefits in the state of Maryland since 2013, with families in other states receiving even less. Does this seem like enough money a month to help dig low-income families out of deep poverty? The answer is that it's not. According to the Center on Budget and Policy Priorities, a family that relies solely on TANF benefits due to a rough period of illness, disability, or joblessness is further below the poverty line than in 1996. Sound bad? After being adjusted for inflation, the value of benefits has actually decreased by 20% or more in 38 states since 1996. And if that isn't bad enough, the monthly benefits for a family of 3 isn't even enough to afford a modest 2-bedroom apartment in 29 states. Now that we know how much is offered to the families receiving benefits and how likely it is to actually help the families it's meant to, let's see how many people actually rely on these benefits for survival. According to the U.S. Office of Family Assistance, the average monthly number of families that received benefits in 2010 was 1,847,159 families. The average monthly number of regular TANF recipients was a little over 1 million adults and 3 million children. On top of that, 82% of recipients also received food stamps benefits. Let's talk a little bit more on the children that are receiving a number of these benefits. Child-only families receiving benefits hit its peak in 1996, with 978,000 families receiving benefits. Thankfully, since then, the trend has decreased. Unfortunately, despite the decrease, the number of child-only families as a percentage of the total caseload of TANF recipients has actually increased. And of the total amount of child-only families, over half actually do have a parent in the home, but that parent was unable to receive benefits due to different reasons, such as citizenship or failure to comply with certain regulations. What are the implications of relying on TANF benefits for a family? As explained before, most families that rely on welfare benefits also need food stamps to eat properly, and yet still don't make enough to fully take care of all their bills and necessities, even with the benefits. The federal poverty guideline for a family of 4 in 2015 is $24,250 a year. According to a 2006 Census Bureau report, the median income for the average 4-person American household is $70,354. As you can see, the current low-income 4-person family only makes 29% of what the average 4-person family made nearly 10 years ago. With the cost of living that's increased since then, how are these low-income families supposed to live, even with help from the government benefits? And how much worse might this problem be for smaller families that may need more help, such as single-parent homes? Families that aren't having their needs met despite the help of government benefits most likely does not have the time, energy, or resources to enjoy themselves or even enjoy leisure time as a family. Parents would still have to work very hard to provide for their families, reducing the amount of time that's spent with children. The stress on the parents is also likely to affect the marriage of a couple due to financial strain. The breadwinner of the family may feel increased role strain, especially if they're the woman of the house. This increased stress in the household may manifest itself in very negative ways, such as drug abuse, alcohol abuse, physical abuse, and domestic violence, or even child abuse. These problems compound each other and affect the entire family, possibly culminating in children inevitably repeating the cycle as adults because of the lack of resources or opportunity for higher education.